Good morning, everyone, and welcome to InvestorExpos show for February 20th. My name is Anna, and I'll be your host today. This session will be recorded and sent to your email. Today we have a great lineup of 3 speakers for you. For the first time on our show, Adrian Reid, Marina Villatoro, and then Passarelli.
Okay, great. I'll see you then. Thanks so much.
Thank you.
Okay, so I'm going to get into the presentation. Let me first start by just asking a question. Would you like to learn the fastest way to consistent and profitable trading? Does that sound good? Is that something you're interested in? And do you want to know how to make better returns with less time, less effort, and less stress? If that sounds good, you're in the right place. My name's Adrian Reid. I'm the founder of Enlightened Stock Trading. And today we're going to be talking about how you can make effortless trading profits by selecting and personalizing the right trading system for you. But first, before we get into that, I want to take a moment just to thank you and acknowledge you for being here, because I know you're all busy and you could be somewhere else right now, but you've chosen to take some time out of your schedule to be here to invest in your trading education. I want to let you know that I don't take that lightly. I know how hard it is to carve out time to do this, and it's really important you get value for the time you spend. So I want to promise you that I'm going to do my very best to make this absolutely worth your while, so that at the end of this 45-minute presentation or so, you'll walk away with some concrete strategies to help you make more effortless profits in your trading. Does that sound good? Okay, great. And again, we're going to cover a lot of ground in this presentation, and just to encourage you to stay with me until the very end, I've got a free gift for you, but only if you stay till the end of the presentation. I'm not going to tell you what it is until the end, but let's just say that it's of huge value. It's going to really dramatically help you take your trading forward, no matter where you are today, whether you're completely new or profitable and experienced. This free gift that I've got for you, if you stay till the end of the presentation, will make a world of difference for your trading. So stick with me, ask lots of questions as we go, and I'll address questions along the way and at the end of the presentation. So here's what we're going to cover today. The first thing we're going to cover is how you can find the best trading strategy for you so that you can actually follow it without stress or killing your lifestyle. We're also going to cover how to improve your trading results by doing less, spending less time and ignoring 95% of the inputs that most traders use, and you're going to make more money doing it. And I'm also going to show you how to build unshakable confidence that your trading approach actually works and keep you safe no matter what the market is doing. How does that sound? Okay, great. But before we get into all of the detail, I just want to share a little story with you. And I'm just gonna, just so it doesn't distract you, I'm just gonna jump off webcam here for a minute and make sure that you can see the slides. So, okay. So you've probably heard this proverb before. Give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime. Now, I know you've probably heard this, but here's the thing, this is not actually the full story. There's several layers missing from this proverb, and I want to start by sharing with you what these layers actually are, because it'll help you as we improve your trading here today. So this is a story about John, who wants to become a fisherman. Okay. All right, let me just get my tech organized. Okay, so John really wants to be a fisherman, and he goes to the wharf every single day to buy his fish, and so that he can dream about becoming a pro like the guys he sees on the wharf. He really, really wants to be a fisherman, and every day he goes to the wharf and he buys whatever fish is for sale from the fishermen there, the professionals. Sometimes John gets lucky and he stumbles across something amazing. Other days he gets undersized, polluted, leftover garbage that was last caught 3 days ago, and it gives him food poisoning and has him running to the bathroom to vomit. Now, no matter what happens, John has to pay high prices at the wharf for his fish, and he never really knows what he's getting. Now, in trading, the analogy here is when you pay for signal services, tips, and newsletters. They give you the trades to take, but you have no idea where they actually come from, whether the long-term results will be.
Adrian, we don't see the screen yet.
You don't see the screen?
No.
Oh, okay. Let me.
Looks good. Thank you.
Okay, you can see my fish.
Give me a fish. Yeah.
Okay, give me a fish. So I'm just I'll continue on because I don't want to sort of circle back and waste too much time. But the analogy was when as a trader, you pay for signal services, tips, and newsletters, and you just have no idea where those signals are coming from, what the long-term results will be, and whether they're going to poison you and have your account vomiting up losses all day long. Now, the sad reality is that most traders are completely dependent. They go around the web looking for someone to give them a fish, and they end up paying people for trade tips, trade calls, advisory service, and all of this. And when it comes to their trading, what happens? They're 100% reliant on someone else to give them or make them money or lose them a fortune. Traders who trade this way are inevitably going to blow up and lose all of their money. So John gets scarred from his food poisoning he received last time he bought fish at the wharf. He decides this time he's actually going to learn how to fish for himself. So John goes to the wharf and he finds a crusty old salt who spends his life at the wharf telling amazing fishing stories. He seems to know what he's talking about, and John asks the man if he would teach him. The old salt says, yes, of course. And he charges John $5,000 to share his fishing wisdom and tell him all about how to catch fish. He gladly takes John's money and tells him inspiring stories about his fishing exploits over the last few years, gets John excited about all of the potential. He tells John about some of the strategies he uses to drag his fish from the ocean, and it makes him even more excited. These were the secrets John was looking for. He sells John all the equipment he needs to go out into the ocean and give it a try, all the while talking about the big fish he's caught with this exact setup. Beaming with excitement, John hands over even more money, jumps into his new boat, heads out to sea. John stops the engine and pulls out his shiny new gear, but before long, John realizes he doesn't actually know what to do. He starts getting a bit nervous because it seems much more complicated when he's out here on the water all by himself. After sitting and drifting for a while, John notices that the sky's clouded over, the wind's picked up, the waves are getting rough, but he still doesn't have any fish. The boat rocks wildly. John starts the engine and heads for land, but he's lost sight of the land and he doesn't know what to do. And then he panics as a massive wave smashes over him, sinking his boat and all the expensive equipment with it, leaving John struggling for life. This is exactly what happens with most trading courses. The guru gives you some amazing stories of trading success, shows you charts of what can happen when all of his spectacular indicators come together and give you the perfect signal. They get you excited and you run off and start trading, but pretty quickly you realize the ideas were subjective, incomplete, and you actually can't replicate the results. You got the general idea, of course, yeah, but you never know exactly what to do. And when frustration sets in and your losses start mounting up, what do? You go back to the guru and you tell him what happened. And what does the guru say? Inevitably, the response is always the same. It's always the same. The response is always, yeah, that's because you don't have enough knowledge yet. You need to buy my platinum level program. That's got all the answers. And this program contains everything you need, and it only costs you another $20,000. It's an absolute bargain. It's exactly what you need. It'll give you all of the answers. This is what most trading courses do. They're general, they're vague, they leave you with questions, more questions than answers, making you rely on the guru telling you what to do. But don't worry, after you've done the platinum program, if that still doesn't work, he's probably got a signal service to sell you. And maybe that'll help you, maybe. Clearly, this is not the path to consistent and profitable trading either. So now John spent thousands of dollars and years of his life trying to learn to fish from the guru at the wharf. He decides to take a different approach. He goes to the fish shop to ask for some real advice. Sorry about the pun, that was pretty bad. John marches up to the shopkeeper and asks for the best fishing rod and the best set of tackle that he has. He also tells him to throw in a life jacket for good measure. He's learned his lesson the hard way when he sank that boat. John feels like he's set for sure. He heads off with his expensive new fishing rod, which was at the top of the recommended list at the fish shop. Of course, he must succeed now. He has to succeed. He heads down to the lake to time for some safe fishing. After all, he's a bit nervous still because he sank the boat, remember? And he spent tens of thousands of dollars on fishing courses and they didn't pay off either. And he also nearly drowned several times. John has to be careful because every time he goes out fishing, his wife thinks he's going to spend more money, lose something expensive, or sink his boat. He can't afford to keep doing it because if he does, he'll find himself living in his car eating 2-minute noodles for dinner. And we just don't want that, do we? John gets to the lake, starts his fishing day, and he stands in the sun the whole day long, casting over and over again and waiting, hoping for some luck. At the end of the day, he's hot, tired, sunburnt, and his wife calls him. What does his wife say? You better bring home some fish. because you promised to feed the whole extended family and you've been bragging to your friends about quitting a job to become a professional fisherman. But he catches nothing. And at the end of the day, John's so frustrated. What does he do? He snaps and he flings his rod into the lake. And then he turns and watches in disbelief as the man next to him, who's only been there 20 or 30 minutes, reels in effortlessly a beautiful fish, strolls off to his car and goes home for dinner. So John, what does he do? He has to bring home fish. He goes to the wharf, he buys whatever fish is there, and he takes them home for dinner. And to add insult to injury, John gives his whole family food poisoning and he spends the night throwing up, swears off fish forever. In the morning, what does he do? He abuses the fishing shop owner, tells him what happened. And the fishing shop owner says, no wonder you didn't catch any fish. You bought the wrong fishing rod. This is what happens in trading when you buy a trading course or program or system based on one particular strategy, looking simply at the results it claims to be able to get for you. If you choose a strategy based on performance, but it's not right for you, you're going to make mistakes, lose money, be frustrated and stressed. Make sense? So finally, after taking a few months off, John still has a burning desire to be a fisherman. He's been burnt so many times before, but he feels this is his last chance. He's got one last go at it. He's learned a lot over the last 10 years, so he does things a little bit differently. He goes to the fishing shop and asks the professional to tell him about the different types of fishing and guide him through the choices. He discovered that most types of fishing are actually not what he wanted to do, and he narrowed it down to one specific type, which was perfect for him, beach fishing. He tried it out and found it suited him because he lived right near the beach and it was super convenient. He had time to walk down to the beach for 30 minutes in the morning before work, and he loved the way it made him feel. The relaxing sounds, the wave crashing, the cool breeze. He enjoyed the process. He started off the day just right, and he enjoyed the sort of fish that he caught. After being guided through the process, it was obvious that beach fishing was his style. He couldn't believe he'd never tried it before. And John got rid of everything that didn't relate to his style of fishing and focused on learning and refining his beach fishing technique. Now he follows the same routine every single day because he has the confidence that it works. He knows it works, and he can reliably get the results that he wants. It's been 10 years since John's love-hate relationship with fishing started, and he's finally figured it out. He catches great fish now, and he smiles as he stands on the beach with his bucket of fish, wondering what all the fuss was about. Everything now feels so simple and natural. So what do you as a trader, what do traders actually need to succeed? I'm going to cover each of the three things that you really need to succeed in this presentation today. But since we're going to be spending a little bit more time together, would it be okay if I'd spent just a few minutes and told you a little bit about myself? Would that be okay? Okay, great, thanks. I can see the comments box flashing here, so I'm just going to have a quick check before I jump into that. Okay, good. So what do you as a trader need to succeed? Well, there's three things, and let me share a little about myself, and then we'll get into exactly what those three things are, so that you can get on with improving your trading. So in my trading journey, in the beginning, I started investing based on all sorts of different advice. I tried all sorts of things, just trying to find something that worked. I tried get-rich-quick schemes that promised 1,000% returns. And of course, just like everyone, I lost all of my money. I tried mutual fund investing, and most people have tried mutual fund investing, and I got boring single-digit returns and huge drawdowns. And frankly, I lost interest, and I didn't get the results that I was looking for. I also tried buying and holding good quality stocks, and they went down. Didn't matter how good they looked on paper or on the fundamentals, they just went down. I tried lots of different indicators and chart patterns and technical analysis, and I just couldn't make money consistently. Sometimes I did, sometimes I didn't, but never in a repeatable way. I tried fundamental analysis, which was great, but my timing was usually off, and so I also lost money. And then I tried technical analysis, and I spent hours looking at charts and analyzing them, but I always ended up confused by different indicators that seemed to contradict each other. Have you ever found that? So much information just contradicts each other. It's very hard to know exactly what decision to make and exactly how to do it consistently. I also tried combining everything, all of these things, except the get rich quick. I didn't try that again. And they always contradicted each other. And so sometimes I'd win, sometimes I'd lose, but it was very hard to know exactly what to do. Have you ever experienced any of these things yourself? I mean, this is the problem with so many trading methods, is they're inconsistent and almost impossible to replicate over and over again. Now, about 2 years into my trading journey, I'd been going sideways and losing money the whole time. I had a few wins, of course, but I never managed to make a new equity high. It was just down, 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 down. And I spent hours every single night looking at the charts and indicators and planning my trades and doing the analysis and reviewing everything. But what I realized after 2 years of doing this was I was actually totally lost. I had no consistency in my results. My decisions were inconsistent. And basically, I didn't have a clue what I was doing. And I came to this moment, which was, for me, it was a quit or a double down moment. It was kind of like an ultimatum, and I gave myself an ultimatum. The ultimatum was either figure out how to make money trading or stop trading and go do something else. Just buy property. You know, everyone seems to do property. So I even bought a few books on property, but I really loved the markets and I love trading. And so I decided to double down on it. And here's what I did. I threw myself into the trading and I read all of the books that I could. And over the next couple of years, I read over 200 books on trading. I stayed up late at night on every bus at work whenever no one was looking. I read my trading books. And over the next few years, I studied countless successful traders. And what I discovered in the research were there are 3 principles that make the most difference in your trading. And I implemented those for myself. And immediately, as soon as I did, my trading turned around and I started making money. But not only that, I was making money almost effortlessly. Now, I'm not saying it's easy, and I'm not saying you're going to get rich overnight. It's not that. It's just that there was no stress, no confusion, no worry. It just worked. You know, it was easy for me. It was natural. And that's what I can get for you. That's what these 3 principles will do for you. So ever since then, as a result of this, my trading ultimately went on to generate enough profits to pay off my mortgage, which was about $450,000. We took a whole bunch of great family holidays. I replaced my income and I bought my freedom and I built a 7-figure trading account. This is what's possible with the right trading approach. But in 2012, I was working like a dog. I still had a job in the corporate world. I earned about $230,000 in my corporate job that year. But in order to do that, yeah, it was good money, but in order to do that, I worked 12 to 14 hours a day, 6 to 7 days a week. And I was completely stressed out of my mind and over it. And I scarred my wife because I said to her around that time, I can't keep doing this or I'm going to slip my wrists. And you know, that was a throwaway comment. It's not that I was really going to do that, but I was stressed out of my mind. The money was good, but the job was killing me. I hated it. And in 2012, I resigned from my corporate job, my corporate career forever. And I could do it because I'd grown my trading account big enough that in that year, trading 20 to 30 minutes a day, I made more money trading than I did in my day job. I wanted my life back, so I quit the workforce and walked away to become a full-time private trader. And I've done that ever since. But not only that, in 2019, my style of trading, this systematic approach that we're going to talk about, allowed me to spend the whole year, or almost the whole year, traveling around the world with my family. We spent time 3 months in the US, 3 months in Europe, and 3 months traveling through Asia, and then settled somewhere in a completely different country just because we could, all the while trading and supporting ourselves through the markets. Because these 3 principles allow you to do that, trade in a way that's easy for you and have a life at the same time. Does that sound good? Is that something you want? So how does this apply to you? Well, today what I'm going to do is show you how to skip all that frustration, skip all the losses. Okay, you can have trading losses. There's always losses. You don't have 100% wins when you trade, but the long-term losses where your account just goes down, 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 you're going to skip those. You're going to eliminate the stress that I went through by focusing on the 3 principles you need to make money trading. Okay, so let's get into it. What is the first principle? Well, the first principle is the trader strategy map. How do you find the best trading strategy for you and actually follow it without stress or killing your lifestyle? So how do we do that? Well, first I want to tell you about a student of mine. His name is Gerald. And Gerald's situation was interesting. He wanted more. He was a mutual fund investor, passive investor, but he wanted more than the crappy returns his mutual funds were generating. He was extremely busy with his work and he didn't have time during the day to trade. But the problem was he was frustrated because the day job stopped him or restricted him from trading, at least from trading often. He had this restriction, very unusual. He could only make 15 trades a month. That was all he was allowed to do, and otherwise he would be in breach of his employment contract. And because of that, he thought he wouldn't be able to trade at all. And that's why he was just a passive mutual fund investor. But here's what we did. We created a set of trading rules that fit within his constraints, the constraints imposed by his employer. And then we ensured those trading rules fit his personality, his objectives, and his lifestyle. And Gerald's now been trading confidently and profitably for several years, when previously he thought he wasn't going to be able to trade at all because we applied these 3 principles in his trading account. So here's the thing, your trading needs to feel natural for you, your personality. It has to fit with your personality and feel natural. Now, what does that mean? Well, think about it in terms of this. You have a certain level, and we're all different, right? But you have a certain level of patience. Now, if you have a winning trade, how long can you comfortably hold on to that winning trade for before you really feel the burning need to close it out and bank the profit? Is it 1 day? Is it 5 days? Is it 5 weeks? Is it 5 months for you, or maybe even longer? You know, the answer is different. There's no right or wrong, but the answer for you is the answer for you. And it's about your trading personality. And this is the key, it's about you. How frequently are you comfortable trading? Here's the second thing. Are you happy making 5 trades a day, 5 trades a week, 5 trades a month, 5 trades a year? Whatever that is for you, different people like different levels of activity. Different people have time and energy for different levels of activity. And so if you've got a trading approach that fits the level of activity you're comfortable with, then psychologically it's very easy to follow. And then finally, are you comfortable with lots of small winners with the occasional large loss? Or do you want lots of small losses with a smaller number of big winners? Now, these are different ways of trading, different profiles of wins and losses. Again, there's not a right or wrong answer, but there is a right or wrong answer for you. If you want lots of small winning trades to give you constant regular reassurance that you're doing the right thing and you're profitable, you're on the right track, that's one thing. But if you like a small number of big winning trades where you just get on those winners and they just go and go and go and grow and make you more and more money, then that's a different style of trading, a different strategy. Your strategy has to feel natural for you and your personality. But it also has to meet your objectives, right? If your trading doesn't meet your objectives, it's going to be almost impossible for you to keep doing it. You know, you've got to be comfortable. It's got to feel comfortable and easy. And the reason most traders give up and quit is because their trading strategy doesn't meet their objectives, particularly in terms of drawdown. So ask yourself this: what level of drawdown are you comfortable with in your trading? You know, will you freak out if your trading account dips 5%, 10%, 15%, maybe 20%? What about 30%, 40%? What can you comfortably tolerate and keep following the rules without questioning them, without getting nervous and without making silly mistakes? You know, and that number is usually smaller than you think, but it's also different for everyone. This is something I've learned in coaching hundreds of traders, that everyone has a different tolerance, and you've got to be aware of what yours is. You've got to make sure your strategy delivers that. And then think about the returns that you're targeting. What level of returns are going to keep you interested in your trading? You know, how much do you have to make in order to keep you interested and motivated? Now, obviously, you're not going to double your account every year. This is not a get-rich-quick scheme. You know, it just doesn't happen that way. Yes, some years you might double your account, and I've done that several times, but it doesn't happen over and over again. So what is your realistic goal for the growth in your account over the next 10, 15, 20 years? And designing a strategy or finding a strategy that will give you that with a realistic stretch. So what return targets and drawdown targets do you have? Once you know that, then again, you can choose a strategy that matches you and fits you. And then the last one, and probably the most important, is lifestyle. Now, why is lifestyle important? Well, how long do you actually want to spend doing your trading, looking at the markets, you know, each day, each week, each month? You know, when you're during the day, can you actually do your trading? You know, can you focus on the markets, or are you busy with your work? How busy are you? And what time can you realistically spend focused on the markets? Now, I want to share you a great story of when I got this wrong. And let me just jump on camera here for a second if I can. So, you know, when I got this wrong, this was pretty catastrophic, and it happened very, very quickly. Now, I was working full time. This was many years ago, early on in my trading career. I was working full time in my day job, and I was working long hours, very, very busy. And I traveled every week, and I had client meetings and phone calls and proposals and all sorts of crazy things going on. And I decided that it'd be a clever idea to try a day trading strategy. And I wanted to do that because everyone was day trading and it was big in the press and all the magazines were talking about it and all the books were talking about it. So I thought, great, I'll try day trading. I can be a day trader. And I found this great strategy and I really loved it. It was very, very profitable on paper. And it was a good strategy. And still to this day, I like the system, the rules. But what do you think happened when I tried to trade it? It traded 10 to 15 times a day. And I had a day job. I had a day job and I was trying to follow this system. And I would do my very best every single day to take the trades and take the signals and exit when I was supposed to and get in when I was supposed to. But it didn't matter what happened, it didn't matter how hard I tried, I always made mistakes. And it was such a frustrating experience. And I did this for 3 weeks. And at the end of 3 weeks, I turned around and looked at my account and I'd lost $30,000 in the space of 3 weeks, just because I was trying a strategy that I couldn't actually execute consistently. The strategy was profitable, but I couldn't trade the strategy. It didn't fit with my lifestyle. And if you're trying to trade a strategy that doesn't fit with your lifestyle, you can't possibly make money consistently. And this is one of the things that baffles me about so many people trying day trading, because it just doesn't work for the vast majority of people. You cannot spend hours in front of the screen watching the charts. And so you need a different strategy. You've got to find a strategy that works for you. And when you do, things change. Let me show you this, what happens when you have a great trading strategy, but you don't follow it consistently, or you can't follow it consistently. So here's an example of a great trading strategy, very, very profitable. I've just picked a bunch of trades just to illustrate what happens. You know, some profits and losses. There's about the same number of profitable trades as there are losses. And this strategy is hugely profitable, as you can see on the right-hand side. It makes great money. But what happens when you make mistakes? Well, if you miss a few trades, if you bank a few profits too quickly and don't let the trades run their course, or you forget to close a trade out and it turns from a profit into a loss, or you're too quick to act, or you're too slow to act, and the profits end up smaller than they're supposed to be, and the losses end up bigger than they're supposed to be, pretty soon a fantastic trading strategy is ruined by trading mistakes. And this is exactly what happened to me when I tried day trading when I was working full time. Now, nothing against day trading. If it actually works for you and you're profitable, great. But the point is, the strategy has to fit you. Make sense? Okay, so the perfect system for you, the perfect strategy for you, gives you the ability to make money consistently. And you need to trade consistently and not make mistakes in order for that to happen. But that's only going to happen if it matches your personality, your objectives, and your lifestyle. Because if it doesn't, you're going to have friction and inconsistency in your trading. And you'll make huge mistakes, miss trades, and you'll lose money. That's why your trading strategy has to fit you. So you can see why this is so important, right? So here's what you don't do. Don't use a trading strategy that requires you to stay awake until 2 a.m. to place your trades, or that needs you to be at the computer all day if you have a day job, or requires you to make trading decisions that stress you out. I mean, if you do any of these things, you're going to make mistakes and lose money. And don't use a strategy that trades short-term moves if you're more comfortable with long-term moves. And don't use a strategy that has lots of small wins and a few large losses if having those large losses freaks you out, causes you to lose sleep. And don't trade mean reversion if you like trend following. You know, choose the right strategy for you and everything becomes easy, simple for you to execute. The second principle of successful and profitable trading is trading elegance. How to improve your trading results by doing less, spending less time, and ignoring 95% of the inputs most traders use. Let me tell you about another client of mine named John. John used technical analysis, charts, and indicators, and he always kept up with world events, news, company analysis, and all of that. And he always looked online, checked the social chatter about all the stocks he was going to buy. Now, the problem was he always spent too much time on his trading, and it was becoming really challenging. He was conflicted, lots of irrelevant information, and he didn't know what to do definitively. So he ended up skipping trades that were large winners, and then also not taking trades that ended up being losers. And so he got the worst of both worlds. He exited winning trades early, and he always missed lots of trading profits. Now, the solution for John was we defined the core trading rules that he actually used. We turned them into a system and tested it was profitable and eliminated everything else. John trades profitably now, stress-free, in less than 30 minutes a day. Now, just like John, when I started out trading, I looked at every piece of information that I could. I looked at fundamental information, annual reports, financial statements, news, analyst reports. I even read The Economist cover to cover every single week. I looked at the charts and indicators and all of that, macroeconomic conditions. Have you ever tried to do all of that, line everything up and actually make a decision? Talk about overload, right? Just like this picture. Now, I did that for months and months and months, but I could never get a clear signal because every time I got an indicator telling me to do one thing, there was another indicator or a piece of analysis telling me to do something else. Have you ever found that? It's funny how that happens. No piece, you never get everything lining up in one way. And if it does, chances are the stock's going to turn around and go exactly the opposite direction because everyone is already in that move. Now, when I started trading the right strategy for me, I started making money, but I still had all of this overwhelm because I was still doing all of this extra stuff, looking at all the conflicting information to make my trading decisions. It was still taking me 3 to 4 hours a day. So what was the elegant trading solution? How did I turn that around? Well, what I did was I looked at everything that I was doing and I found that there were just a couple of core trading rules that actually generated the profits. These were elegant, simple, and objective. It was like this. If A and B and C are true, then buy. If D or E is true, then sell. Just simple, logical rules. Now, A and B and C turned out to be technical rules like indicators, and so did D or E. But here's the thing. Once you have objective, simple, logical rules, all of a sudden you can ignore everything else that's going on. All other information, all other social chatter, none of it matters. Immediately what happened? The time required to do my trading fell from 3 to 4 hours a night to just 30 minutes a day. The stress and worry immediately disappeared, decisions became more consistent, and my profits increased dramatically. This is what happened for me when I did this. And I got 3 to 4 hours of my life back at the same time and made more money doing it. Now, trading elegance, what does it mean? It means using a simple trading system to drive all your decisions. What's a system? A system is a complete set of rules that tells you what to buy, how much to buy, and when to sell. It consists of a setup, which are the conditions under which you'll consider taking a trade, an entry, which is the precise moment to buy, and a stop loss to keep you safe, and an exit telling you when to get out, hopefully with a profit. And wrapped around all of that is the portfolio, the risk management, and the position size. Make sense? Let me give you a quick example just to bring this to life. So I'm not recommending you trade with this example, okay? But it's just a simple, elegantly simple system for you to consider. The setup is the close is greater than the 50-day moving average, and also the close is greater than the 200-day moving average. If those two things are in place, the stock rather, is very obviously going up, no debate. The entry trigger is a breakout to a new high after a pullback, let's say a 200-day high. So this gives you the exact moment to enter the trade. The initial stop loss would be a 4 average true range stop loss. So 4 average true ranges below the entry price, that's where you'd place the stop. And then the exit is a trailing stop loss, which trails 6 ATRs, 6 average true ranges below the highest price since entry. This is an elegantly simple trend following solution. Now you might have to have a few other rules and filters to make this work really well, but in essence, this is what trend following is all about. And a simple system, if A and B and C is true, you buy. If D or E is true, you sell. This perfectly illustrates that concept. Now, what's the daily process to trade like this? Well, it's actually incredibly simple and far more simple than what most people would think. First step is to update your trading data for the previous day, because we're using daily charts. We're not looking at intraday charts, okay? And all that requires you to do is open your downloader and press the update button. And that then goes to the internet and pulls in the most recent day's data. That takes about 5 minutes. Second step is to check your charts of the open positions for entry and exit triggers. And again, that's going to take about 5 minutes. Third step is to run a scan for new buy signals. And that's going to take 5 minutes or less, depending on your speed of your computer and how many stocks you're scanning, but typically much less than that. The fourth step is to place your buys and sell orders with your broker. Okay, this is maximum 10 minutes. You generally have a few trades a day. It's very quick and easy to place your trades, place your orders with the broker. And then finally, step 5, you update your trading diary, and that might take 5 or 10 minutes. All together, that's it. That's all it is. All together, total time, 30 minutes. But in reality, most days, it takes far less time. How does that sound to you? Now, would that change things? Simple step-by-step process, objective rules, elegantly simple trading. Now, here's what you don't do. This is the bit that I love the most. You don't read the newspaper, you don't watch CNBC, you don't spend hours scouring Bloomberg. You don't evaluate charts, look at trend lines, support, resistance, or any of that sort of stuff. You don't call your broker, your friend, your uncle, your brother, your dog, your cousin, your sister, your mum, and ask her what they think about your stock pick. You don't spend hours online asking other people what they think of your stock picks or asking people what stocks to buy. I mean, have you seen how many people ask what stock should I buy in Facebook groups? And they're asking random strangers who are no more informed than they are. You know, you don't need to do that when you have an elegantly simple trading system that fits you. It changes the game totally. You don't have to evaluate the socioeconomic and market impacts of the latest virus, the political crisis, economic development or news item or anything that comes out. You don't need to worry. Because why? Because none of that adds any value at all to your trading. None of it. All that matters is your elegantly simple trading rules that have an edge in the market and make money over time. When all your decisions are made like that, according to trading rules alone, here's what happens. You suddenly become consistent. Trading takes less time, your decisions are clear, you have no stress, and you can place your trades and get on with your life. How does that sound? Sound good? Absolutely. This is the way I've been trading for the last 15 plus years, and it changes the game completely. Now, principle number 3 is the robustness method. How to quickly build unshakable confidence that your trading approach works and will keep you safe no matter what the market is doing. Now, what's a robust trading system? A robust trading system is kind of like an SUV four-wheel drive vehicle. If you've got an SUV, what can you do? You can pretty much go anywhere, off-road, on-road, short trips, long trips, speed bumps, dirt roads, no problem. Nothing's going to break the car. You'll get where you want to go. Now compare the four-wheel drive SUV to a unicycle. You can ride a unicycle, particularly if you're a clown, right? But only if the conditions are exactly right. Otherwise, what's going to happen? You're going to fall off and hurt yourself. It's unstable and it's fragile. A robust trading system will keep working over time and keep you safe no matter what the market conditions are doing, just like an SUV four-wheel drive vehicle. But here's the thing, I can almost hear you asking, but how do I know if my trading rules are profitable or not? How do I know if my system works? And the trick is you need to test the rules. But how do you test them? There's several different testing approaches. Let me go through them one by one. First, you could don't test, just hope, right? Just hope they work and start trading. Now, this is kind of like jumping into a car, hitting the gas with your eyes closed and not wearing a seatbelt. You might get where you want to go. Chances are you're going to wreck the car, hurt yourself, and kill someone that you love. Now, I hope you'll agree that this is risky and probably reckless. Blind faith in any trading rules just does not work. You will lose all your money. It's only a matter of time. The second approach is to paper trade. Now, paper trading for a while to collect a sample of trades and check they're profitable is something that's really widely promoted, widely talked about. Lots of books talk about you should do this. And look, this is kind of like reading a driving manual for 10 minutes to learn how to drive, and then jumping behind the wheel of a car for the very first time. You might have picked up a few pointers from the 10-minute read of the driving manual, but you got nowhere near enough experience to make sure that you don't smash the car and kill your family. It's better than nothing, yeah, absolutely, better than nothing. But unless you plan to paper trade for 15 years, you'll never truly understand how the system will perform in the market conditions, because you need to know how it'll perform in bull markets, sideways markets, and down markets. And this takes years. If you paper trade for a month or two, you just have nowhere near enough information. And really, it's not much better than option 1. The third option is to scan the charts manually and review them for entry and exit signals. Now, this approach is kind of like learning to drive by having a couple of lessons in your quiet street near home and then deciding to drive across town at rush hour for the very first time. You've got some experience, but you're really not prepared for everything that could happen. It's mildly better than paper trading and certainly better than trading in real time, but it's still an insufficient solution. Because even if you do this, you can only do it one stock at a time. And maybe if you're really disciplined, you'll generate 20 or 50 or 100 trades. And it might give you a bit of an idea, but is it enough? No, it's not enough. Because you still don't know what will happen in bull market, sideways market, and bear market. And you've only looked one stock at a time. You have no idea how a portfolio will perform, because you don't hold one stock at a time, do you? At least I hope not. You know, you need some diversity. You hold more than one stock, more than one instrument. Doesn't matter what you trade, whether it's stocks or futures or Forex or whatever, you hold a portfolio. So testing this way, you never actually get the information that you need. The fourth approach is automated backtesting. Now, clearly, this is the way to go. As soon as you have objective rules, like we saw in the previous section, you're in a position to automatically backtest those rules. And with the right software and the right process, you can do a backtest in an extremely powerful way. It's kind of like spending several weeks in the car with your own personal instructor, checking you know everything and every possible scenario over and over again. It's going to make you a really good and importantly safe driver. But the great thing about trading is it doesn't take weeks. Once you've learned how to do this, it takes about 30 seconds to backtest your trading system over several thousand stocks over 25 years of market history and generate thousands of trades. That will change the game for you and show you how to be a profitable trader. It's kind of like having a stock market time machine. You can go back in time and repeat the process over and over again with different variations of your rules to make sure that it works. Okay, now after hearing this, you might be thinking, yeah, but the future's not the same as the past, right? So how does backtesting really help? Let me cover this in a couple of simple steps. And I'll try and get through this as quick as I can so that we've got some time for questions. The first question I want to ask you is, if you had rules that lost money in the past, do you think those rules would make money in the future miraculously? You know, they never made money before. Will they work in the future? Probably not, right? Now, but if you had a set of rules that was profitable in the past, could they maybe make money in the future? Yeah, absolutely. But what if your rules were tested in the past over 25 years of data through bull markets, bear markets, sideways markets, volatile and quiet, and they made money? Could they continue making money in the future? Yeah, quite possibly they could. Now, what if your rules made money over a wide range of indicator values and it didn't really matter much what indicator values you used? The system still made money. Is it likely they'd make money in the future? Yes, absolutely. And if you made money on past data that you designed the system on, but also unseen past data that you kept aside to in reserve to validate your system, is it likely they'll work in the future? Yes, absolutely it is. So the idea that it's just past data, how can it reflect the future, is flawed. Because yeah, it's the past data, but it's all you've got, and it's way better than the alternative. So my method of backtesting does exactly that. It builds robust trading systems that you have confidence in, and I call it the robustness method. Now, I can hear you asking, but you know, what about the coronavirus? What if there's a war? What if there's another financial crisis? What if? You know, there's always something that could happen, but the market can only do certain things. It can go up, sideways, or down, and that trend can continue. There can be a shock against the trend, or the trend can change. And all of those things, all of those combinations, there's 9 possible behaviors. They've all happened again and again and again over the last 25 years. So if you backtest properly, all of those market behaviors are included in your backtest. Backtesting checks your system will survive all those different market conditions, and it gives you a huge advantage. It's absolutely critical if you're to succeed. So we've covered 3 principles for effortless, profitable trading. Principle 1, the trader strategy map. How to choose a trading strategy that matches your personality, objectives, and lifestyle, so it's stress-free and easy for you. Principle 2, trading elegance. Create an elegantly simple trading system you can follow consistently and ignore everything else. And principle 3, the robustness method. Cultivate unshakable confidence by backtesting your trading strategy correctly in all market conditions. Now, just to wrap up, let me ask you, do you want to take your trading to the next level? Do you want specific actionable guidance to improve your trading? And do you want to discover simple changes that will make you a better trader? And do you want all of that for free? Because remember, I promised you a free gift to staying with me till the end of the presentation. So click the link below and take my free trading quiz. It takes just 5 minutes, and here's what it's going to give. It's going to give you specific actionable recommendations and training based on how you're trading today. It'll improve your results and make you a better trader, and it's absolutely free. So go to bit.ly/EST trading quiz, and I'll see you on the other side.
Well, welcome everyone. Once again, my name is Dan Passarelli. Super glad to be here, and hope to give you everything I've got to give you in the next 45 minutes. What we're going to talk about today are top option trades for the rest of this month. Before we get started, I need to point out that options are not for everyone. You should read characteristics and risks of standardized options before trading. Okay. Let's just make sure we're all where we're supposed to be here. Who is here for specifically for this presentation. Top option trades for the rest of the month. Give me a yes if that's you. Just go down into where it says questions, type in yes. All right. Clausen Paul. All right, cool, man. Jose, got a few people. Perfect. Who's here to get really serious about their trading success? Give me another yes. Robert says he is, right? Robert's serious as can be. All right, awesome, great. Who, and Steve, okay, got a few more, great. Jose, I like the serious people. Now, tell me this, who's ever felt frustrated and felt like, man, I just wish I could have a little bit more confidence, a little bit more consistency in my trading? Don't be shy. I'm not going to read your last name and your, email address to people or anything here. It's time to share and open up, be candid. Who's ever felt really frustrated and wish they had more confidence and consistency? Give me a yes. I've got my hand in the air, right? I've got my hand in the air. Yeah, there's Robert, Steve, okay. Top trader, awesome, very good. Who's here to learn and share in a supportive community, and who's just gosh darn happy to be here? I am. Okay. Well, if you check off the boxes for any of these, hopefully all of them, you're definitely in the right place. Now let's talk a little bit about what's possible. First of all, again, thanks for joining us. It does take a level of commitment to invest in yourself by showing up on a webinar like this. And I understand that as much as anyone. If you're the kind of person who's willing to make that kind of investment in yourself, I love that. It's the kind of commitment we see in our best traders, just putting in that effort, investing in yourself because you really want it bad. Those of you who fearlessly approach, not just the market, but fearlessly approach your trading enterprise, your trading business. Amazing things can happen for you when you have no fear, when you're that committed. Now, the reason I'm sharing this webinar today is that I was thinking about trading resources. And I thought, we can't just all call the hotline when we need a trade idea, Like the market's been moving kind of dicey lately. We've had a lot of our students needing trade ideas. Wouldn't it be great if we could just call a hotline or have a trade if you have a trade that's in trouble, just be able to pick up the phone, call an expert. It'd be nice, wouldn't it? So I figured I'd join this webinar here with Anna and the team to show you exactly what the key market drivers are and share what our community is thinking and what our plan is for the rest of this month, and give you some trade ideas from both myself and our head coach, John. So today I'll share strategies from the MTM community. It's Market Taker Mentoring Community. That's where I'm from. We'll do some market analysis and give you Coach John's trading plan. He's our head coach here. And top trade ideas for right now. And at the end, I'll show you how you can take the next step and make all this really, really easy and gain confidence and consistency in your trading. Fair enough? Everybody good with that? Give me a yes if we're all good with that. Yes, 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 yes. Steve says yes. Robert says yes. Lisa says yes. Okay, good. All right. So once again, I'm Dan Passarelli, the author of Trading Option Greeks and the Market Taker's Edge. This is sort of a pictorial reference of some of the companies that I work with on TV rather frequently, talking about the markets. I work with many of the options exchanges all around the world and probably all the option brokers in the US and many outside the US. And I've helped traders just like you in over 50 countries to become successful traders. In fact, here's this picture down here at the bottom right is a picture of me and Coach Johnny Cat, and me together in Beijing at the Forbidden City doing some sightseeing on one of our trips where we were invited out there to train some traders in Beijing. So what I'd like to do now is tell a story. Would that be all right with you? Do you mind if I share a quick personal story? Give me a yes if you don't mind if I share a quick personal story. All right. Class Paul says tell a story. Steve says yes. Jose, top trade. Okay, good, good, good. So I started my trading career in 1993. I literally printed up a stack of resumes. I knocked on every single door of the Chicago Board of Trade building, and lo and behold, a day out of college, got myself a job as a runner down on the trading floor. It's the lowest entry-level position. I was making $9,000 a year. Yes, nine, not 19, not 99, $9,000 a year. So I was pretty broke. My rent came out to about $10,000 a year. So I had to work odd jobs. You know, it was tough. I struggled, you know, but like you, I invested in myself, putting in my time and frankly invested, you know, in foregone salary. All my friends were making like 40 grand a year. I was leaving 30 grand a year on the table. And I did that for about 4 years. So, you know, basically in money that I could have had, I foregone over $100,000. So yeah, I kind of struggled, but I still held on, even when things got really hard, even when I was working, you know, 80 hours a week just to make ends meet. I just felt that I was in the right place. I felt that being around a community of other traders and having experts, me being a clerk for a trader, Gino, he showed me the ropes. I mirrored his trades, every single one of his trades. So I learned by watching. And ultimately, that's what ended up bringing me to where I am today and having the opportunity to do all these really wonderful things and to share some of them with you today. All right, so I want to talk a little bit about some of the trades from our community. So my education, like I said, was down on the trading floor. I learned on the job from being in a community of traders and mirroring trades of professionals. Did I make mistakes? Yes. But the more I listened to people around me, the better I got. So the thing is I asked a lot of questions, all right? And the thing, you know, like sometimes people are embarrassed to ask questions. And at the end of this presentation, I should have enough time to do some Q&A. So please stick around until the end so I can answer your questions. Because, you know, if you have a question, somebody else probably has that same question, and somebody else has that answer. So the MTM community chat room is one of the resources that we give our students, and it is the best community of option traders in the world. People share trade ideas in the community. They support each other. If you're a new trader, oh my God, it's an amazing resource because you're able to mirror some of the trades that people make too. But I'm telling you this now because I'm going to show you later how you can be part of our community chat room for free. Now, I did a survey among our students a while back, and I wanted to know what option strategies were working for them. The majority of them said credit spreads. Some of them said debit spreads. Some of them just bought calls and puts. Time spreads are popular in our community because we can really get an edge with them. And then there's some complex trades and other spreads. But this is kind of important information, you know. I mean, we have arguably the strongest option trader community in the world, and this is what they're trading. And most of them are up on the year when I took this. Again, this is a few months back, so there's kind of proof in the pudding. Now, this is also very telling. What option strategies were they most interested in learning about? Time spreads was the biggest one because when we make trades to get an edge. Time spreads enable us to get an edge by using a volatility analysis. Actually, credit spreads do as well, which is why they're in second place. Like all our trading that we cover in our classes when we give our students trade ideas in our daily class, they're all edge-based, okay? They're not guessing, they're not hoping, they're not reading the news or anything like that and trying to figure out what a stock's gonna do and hope to guess right. It is all about getting an edge. So now I wanna share my market analysis and Coach John's trading plan. I'm gonna share some of the actual real trades that he's made and that I've made and that some of our students shared in the chat room. Oh, before I get started with that, I do want to pose one question for you. If you could invest, say, $1,000 and it paid you back $2,000 or $5,000 or $10,000, would you do it? Would you do it? Yes, give me a yes. If you could invest $1,000 and make back 1,000 or 2,000 or 5,000 or $10,000, would you do it? So Robert says yes. Lisa says yes. We've got some people saying yes. And then Klaus and Paul says, Top Trader says yes. He says, over what time frame? Yeah, so there are actually a couple of questions here. If you could do it, and you were really confident because you've seen it happen. You knew that you could do it, and you could do it consistently. If you could do it again and again, month after month after month, would you? Now, and I'm talking about short time frames too, by the way. Yeah. So, right, the answer is an obvious yes, right? So let me show you how we get some consistency here. I first want to start out with a little bit of a market analysis so we all get some context. It's crazy. I took this screenshot like 45 minutes ago and things really changed since then. It's been an eventful couple of weeks, and we learned a lot. A lot of what we already knew has been supported. So here's a brief synopsis of the inside factors that have been at play for quite some time now. So the economy is going well. We just heard from the Fed minutes. That was yesterday, right? Good unemployment numbers, good numbers all around. Interest rates are low and are not likely to rise. The minutes said that the Fed plans to keep interest rates still. And interest rates are historically low, right? Interest rates are historically low. And why is that important? Because that's what drove the bull market from 2008 to 2017. And what happened in 2017? Well, ultimately started talking about raising interest rates. And when we did raise interest rates, that caused not just some volatility, but some market pullback. And then we ended up cutting interest rates, and that's continuing to drive this bull market. That's very important because that's fundamentals, and not fundamentals like, guessing how many people are going to become ill from coronavirus and how that might affect things. Like, this is just pure fundamental market driving factors. It's a risk on scenario. Low interest rates are likely to perpetuate a good economy, good earnings, and rising stock prices. These factors, they started to feel like nothing could stop this market a few weeks ago, and we'd be in for a years-long rally. And that might still be the case. Coronavirus has been mostly shaken off, but some companies like Apple said they will be affected going forward. It will have a longer-term impact on some companies and the economy. Is that enough to lead to a large market pullback and correction? Probably not, but it's one of the factors that we consider. Overall, here's the thing though. We're not going to worry about guessing anything about coronavirus or anything else. Overall, what we need to do is what floor traders like I was, they call it trade. You've got to trade the tape. You trade what you see, you trade the data, you trade you trade for edge, you trade the numbers, and trade your plan. So what's been working? So look, this has been working really, really great. And this one, I'm going to start out talking about investors. We're going to talk, all the rest of our trades are for what I would call traders, a little bit of a difference there. But I feel that it's important in a presentation like this, and even in our own classes, to offer different trade ideas so that everybody gets a good takeaway from the class. Make sense? Am I making sense? Give me a yes if that makes sense. Yes, we'll share. It's important to share many different types of trade ideas, right? Yeah, Steve says yes. Lisa said yes. Okay, good. So selling puts, right? So for me, I scaled out of some of my longer term holdings in spiders. This is SPY. And when the coronavirus hit, it drove an amazing opportunity. because what it enabled me to do was to sell some puts. I sold first, I want to say maybe it was the 320s, it was a couple weeks ago, obviously. I want to say it was the 327 puts, and I was just selling 3-day close to the money puts, got away with that. And then I sold the 325 puts, ended up getting assigned, which a lot of people fear, but that was the best thing that could happen to me. Again, trade your plan, always. I had a plan for this. My plan really was to get assigned, and I did, and I was able to pick up, 12 or 12, 13, 14 bucks in profit on the stock that I ended up getting assigned on, and then I could roll that into covered calls. So it's making money by the puts expiring or buying dips. It's basically a win-win. And why is it a win-win? It's because I had a plan for it. Another version of this was great. I actually did this a number of times. I did this for the first time at the end of this year for the holidays. Me and my family went to Thailand. Got back right before the coronavirus business started. We were in Thailand for a couple of weeks. I closed out a lot of my positions, but I didn't want to be out of the market. So I sold some puts and I bought a bull call spread, and the price of the puts financed the bull call spread. Now I took the screenshot just maybe it was about an hour ago. The market's a little lower now, so actually the opportunity is potentially a little better here because implied volatility rose a little bit. The VIX is high. I mentioned selling the 335 puts, which at the time you could have sold for about $1. They're worth more now, and buying the 338, 341 call spread, and you could have done that whole trade for right around even money. The price that you could sell those puts for was the same price that you could buy that bull call spread for. So for people who want to play a continuation to the upside and you're not afraid to pick up some shares if spiders fall some, this is a perfect storm. I mean, this, especially when implied volatility is low, when you get those pullbacks, you sell those overpriced puts and buy the fairly volatility neutral bull call spreads. You can put it on for pretty much even money, and you're set up for the rise when it turns back around. Now, I want to talk about a trade that just today in our Market Taker Live Advantage group coaching class, where Coach Johnny Cat, talked about this trade. I happened to be auditing his class today, watching. After the class, he emailed me and he said, "Man, why are you spying on me? Why you watch my class?" I said, "John, I'm watching your class so I can make some money trading. Like you give me the best trade ideas there are." John's a former Goldman Sachs guy, right? So he's exactly the kind of guy you want to listen to. So yeah, even though I've been in this business for 26 years, I want to say, 1993, 27 years, was a market maker on the floor of the Chicago Board Options Exchange, wrote 2 books on option trading. Yeah, I'm watching John's class to get the trade ideas. So this is one of the trades that he talked about in the class. It was in TLT, right? Which is the ETF on treasuries. So TLT is bouncing up here against resistance, kind of pulled just a little bit through resistance here at about 146 bucks. The high for at least the past 3 years, is as far as I went back, because that's about as far as I need to go back, was 148.90. So when you see resistance like this, especially with elevated implied volatility, that sets up a perfect call credit spread. And that's the trade that John gave in his class today, and the trade that I immediately put on. So the February 28th expiration, 148, 149 call credit spread at 19 cents. So the probability is on our side because we've got resistance there on our side. We've got high implied volatility. And so it was just another one of the solid trades. Here's another of one of John's trades that's set up really, really nicely. Google was up around 1530 at the time, and John was looking at support in this case. There's big support at this round number, 1,500 bucks. There's more support a little lower at about 1,485. And volatility is somewhat elevated. So this trade is just sitting pretty. The takeaway here, okay, so the trade was this. The trade was selling the February 28th, 1480, 1485 put credit spread at 55 cents is where I was able to get filled. Now, what this all comes down to is two things. There's 2 points when it comes to trading. There's getting into the trade and there's getting out of the trade. Those are the only 2 things you can control. And if you're good at controlling those 2 things in the long run, it doesn't matter what else happens. You're going to be right sometimes, you're going to be wrong sometimes, but you'll make money if you can get in with an edge and you can manage the trades properly. It's that simple. So the takeaway here is once I put this trade on, I immediately put in my limit order to close that trade, and I put it in good sell cancel. Now this is a trade that I've been making for the past couple of weeks now. So Target Corporation was trading at about 125. They had, I think that was when they had same store sales back in this area here, this area here, and it broke down below its 50-day moving average, and it kind of bottomed out and it established support at the 110 level. So I waited until it kind of equilibrated a little bit, and at that time sold the 110 puts and bought the 108 puts. Sitting there at support, sitting there with elevated volatility, which means overpriced options because it pulled back, and it was a great trade. It worked out perfectly, and so I ended up buying the spread back for like something like a nickel or something like that, and then did it again. But this time I did a higher strike. I sold the 113 puts and bought the 111 puts. That is also a February 28th expiration. And so that trade's still on. I've got an order working to close it. I don't expect to get pulled today unless Target makes a run towards the upside. But you know, like this is what it's all about. Selling put spreads in names where they have support, selling call spreads in names where they have resistance, using implied volatility. Now, I realize that I'm making it sound really, really simple, like, yeah, just these 2 things. And in a lot of ways, it really is. Is there a little bit of nuance to it? Yeah, there is. But you know what? Anybody can learn this nuance. I mentioned before our chat room. So in our chat room, we've got some students who have been in our group coaching class for years, right? Because, well, if they're making money, they're going to stay in the class, right? And some of them are really, really killing it. And they post their trades real time in addition to the trades that John gives. And some of the newer traders, so this trade right here, this is a couple of days ago. He ended up putting on a directional calendar in Zoom, symbol ZM, and ended up closing the trade for an overall profit of 29%, which was just a couple of days. So am I making this stuff up? No, I'm literally showing you real trades from real people, me and John and people in our community chat room for everybody to see. And one of the real advantages though is like this guy, and I blacked out the names. This guy is one of our newer students, you know, like he considers himself a novice, and he's in here getting some of the trade ideas from our students who are making a killing, you know, who just grind out consistent profits confidently month after month after month. And you know, he's in the chat room and he's watching and not just learning, but I like to call it earn while you learn. So as far as the rest of the month goes, trading it's going to be somewhat, I mean, trading's always news driven. As far as interest rates go, because the Fed came out and said that they're looking to hold interest rates for the foreseeable future, that's just good news is good news. You know, sometimes it's the opposite. But when we get good news on the economy, good unemployment figures and all that, that's just fodder to drive the market higher. Now, the coronavirus gives us opportunities. Volatility gives us opportunities. And one of the biggest lessons that you could have learned over the past at least couple of weeks is that the market can change in an instant. And if you're good at just one type of trade or just two types of trades, it's not going to cut it right now. You don't have to be good at everything. You don't have to like have the experience of a market maker, you know, but it's good to have resources. It's good to have you know, different trades presented to you that you understand. Because look, like, get your information. Trading is an information business. I can remember the last trading firm I worked at. In fact, honestly, probably all of the trading firms I've ever worked at, there was always an analysis desk. The pro traders would rely heavily on the analysis desk. Like, it was the analysis desk's job to scour the market, to do the research, to do the analysis, and to give the trade ideas to the trader. They were a designated person who does the research and passes the trade ideas along to the traders for final analysis and execution. And I will tell you what a luxury. It made it so much easier for traders to make money and to make more efficient use of their time. They let someone else basically do all the heavy lifting, all the research, all the complex analysis. And they, the traders, then got the trade ideas, and they were the ones who traded it. It was their trades. They got the glory and the money. And that's why they made millions of dollars. But the ideas often, in some cases, almost always came from the trade analysis desk. So trading is an information business. Key support and resistance levels. Have a plan going into every trade and trade what you see, right? The essential part of the plan, there's two parts: getting in the trade and getting out. Getting into the trade is what everybody focuses on, but getting out is what really ends up mattering. John says, I consistently reminded our group coaching students to focus on risk management, and this paid off. And the one thing that I'm famous for saying is I talk about the 3 M's of investing and trading. Management makes money. Without management, trading's tough. This is one of our students, Kat, who was in our group coaching class for years and years. And she was one of the most vocal members of our MTM community chat room. And this was a little bit ago. She closed the shop put spread at 20 cents. And she says, if anyone has a question about whether trade management matters or not, it does. She shifted what was setting up for a loss of about $3 and eked out a gain. How many of you have ever been in a situation like that where you're like, crap, I'm down. If I could just get my money back on this trade, I'd be thrilled. You know, management makes money. She says the moral of the story is listen to Johnny Cat, that's John Kamisk, our head coach, the Goldman Sachs guy, when he talks about managing your trades. So how often can you find great option trades? The answer is all the time. Some market periods are better than others, but great trades exist every single day. So we talked about strategies from the MTM community, market analysis, and John's group coaching plan, and I shared some of the top trades that John shared in the class just today. We haven't covered yet how to move forward from here or how to consistently discover the best trade ideas every day, management plans and pro tips. I mentioned volatility trading, you know, volatility analysis is very important. So let's talk about that. Let's talk about how to consistently make money in the market now and going forward the rest of this month and the rest of this year. Let's walk through this simple process together. I'm going to share this with you. I believe anyone can make money from the market consistently with low risk. I've seen it. The only problem is the people who don't, they overcomplicate it. They take the hard route. And you know what, honestly, I've done this in my own life. You know, when I first started Market Taker Mentoring, which I mean now is the leading option education company in the world, I didn't know how to build a website. You know, I was a trader. I knew how to trade. I was good at explaining it to people and good at showing them what to do. I didn't know how to build a website. I tried to figure it out. I didn't know how to use like email service providers and like HTML, you know, like I tried to figure it out on my own. I figured, hey, if I know how to trade and I'm good at sharing these trade ideas with people, you know, everything's going to be fine. But I realized there was so much more I had to do, and I tried to figure it out on my own. And it was like beating my head against the wall. It's not my skill set. Trading is my skill set, right? So then I realized you can buy experience. And that made my life so much easier. And I was instantly able to help thousands of students instead of spending all my time frustrated trying to figure out stuff on my own that somebody else already knew how to do and would just tell me what to do. So that ultimately led me to creating the Market Taker Live Advantage group coaching. This is the class that John Kamisik, the ex-Goldman Sachs guy, teaches every single day that I actually watch so I can make money in my trading. In this course, we're going to share with you all the techniques we use at MTM to set up debit spreads, credit spreads, time spreads, iron condors, all the trades that give you a high probability of success and give you an edge. So you can stop guessing and risking your hard-earned money on weak trades that underperform. So that you can generate consistent low risk profits and make your trading simple and stress-free. And here's just some of what you'll learn in that class. How to easily scan the markets for high probability trades, how to select optimal trades to maximize the probability of success, how to select the optimal expirations, rules of thumb, planning entries and exits, and most importantly, the 3 M's, management makes money. So right now, you have an opportunity to take your trading to the next level, to benefit from decades of experience between me and John. John's been doing this even longer than me. To benefit from a team of fellow traders and to maximize your profits and chances of success while minimizing your risk. So look, what I'm about to share with you is for you if you want more consistency in your trading, if you want more frequent winners, if you can follow a few simple steps. You're fearless and ready to be the trader you always knew you could be. You're so close, but you just need that extra little bit of help. This is totally not, you know, get rich quick scheme, you know, or anything like that. You know, can you make a lot of money trading? Yes, you can make millions of dollars trading. All in one trade, all in 1 week? No. This is about driving consistent, low risk profits so you can trade confidently without spending a lot of your time with no stress. It's not for indecisive traders, but that's kind of an oxymoron. If you're indecisive, you can't make a decision, you're not going to make it as a trader, right? And it's also not for people who like doing things the hard ways. If you have years to spend sifting through all the free crap you can find online and attending webinar after webinar after webinar, you know, listening to speakers who it turns out you aren't really for you, if you're okay failing over and over and over again until you finally get it right, so you can save money and not pay for education but lose tens of thousands of dollars to the market, you know, they say if education is expensive, if you think education is expensive, try ignorant. With trading, if you miss out on 3 years of trading profits because you want to figure it out on your own and lose money during that time instead of making it, it's about 1,000 times more expensive than education. So here's the opportunity I want to give you today. The Market Taker Live Advantage group coaching class. John logs in for 1 hour a day from 9 to 10 Central Time. That's 10 to 11 Eastern. And he scours the market hours before that, and he's just in the market every day, and he finds the top trade ideas every day, and he shares them with you. He shows you literally exactly how it's set up, why it's set up, so that you earn while you learn. And the best part of it is, like, many people have tried alert services, and they tell me, Dan, alert services don't work for me. That's because most of the time you don't get the management plan. This is earn while you learn. You truly understand the trade and you know exactly how to get in and when to get out. So this is, we've had people in this class for years because it's only $349 a month. And if you can make $1,000 a month, $5,000 a month, $10,000 a month in this class, this investment can pay dividends the rest of your life. Now look, these are live classes every day. You will start this class tomorrow. You're going to be online with John every day in this class for the next month. John has been doing this for a long, long time. The 10,000 hour rule states that if you do something for 10,000 hours, you're an expert. John's been in the live markets every single day for the past 29 years, I want to say. Given just weekdays for an 8-hour day, that comes out to John having over 50,000 hours of experience. He's an expert 5 times over. The daily group coaching class is normally $349 a month. Just $349 a month to get John's expertise and trade ideas every day, to get his management plan every day, and to make your trading simple and stress-free every day. But I know we just met. Many of you haven't heard of me before this presentation. I want you to feel great about joining this class. And I want to make it so you can fearlessly make the decision to see if it's for you. So we're going to make this basically impossible for you to say no to. And we're going to give you some bonuses so you can get the most of this class. So look, we're going to give you the group coaching class, which is $349 for the month. We're going to give you access to the chat room as a bonus so that you can talk to our top traders and see what trades they're making every day. For those of you who are new to options, someone saying they hadn't traded spreads before, we're going to give you the Options Impact Video Series videos. Those are $500 on our website. We're going to give those to you as a bonus. And the MTM Community Hotline. What happens when a trade goes against you and you're down money and you've got a question? Well, we sell that resource on our website for $1,000, but we're not selling it today. We're going to give that to you as a bonus. This is a $1,945 package, but that's not what you pay today, right now. Anyone who joins us right now at markettaker.com/99, markettaker.com/99 will get this entire package for $99 right now. 1, 2, 3, go to markettaker.com/99. This is, as soon as you enroll, you're going to get a username and password. You're going to sign up for tomorrow's class. You'll be able to actually watch the recording from today's class and from the classes from the past 3 weeks if you want to get a feel for what John's been trading and watching. And I decided to throw in one more special bonus. Every so often we do a student appreciation event. It's a town hall meeting style webinar. We're going to give you my plan for the entire month, and we're going to specifically drill down on volatility trading, okay? We're going to talk about straddles, strangles, and time spreads. You want to get great at spreads? This is a class that's complimentary to you when you join us at markettaker.com/99. It's $350 for everyone else. We keep the class small because I found that if there's too many people in the class, we could potentially move the market, right? If John says, hey, this is a great trade right now to buy this at 50 cents, and there's 500 people in the class, everybody buys it and it's not 50 cents anymore, right? So we have to keep the class size small. So right now we're accepting 12 students at markettaker.com/99. So this is only good for the first 12 students right now. Again, the group coaching class, normally $349. If all you got out of this was just the group coaching class for, what does this come out to? Like 65% off or something? Wouldn't this be worth it if you got trade ideas every single day from John? Well, we're giving you the chat room so you can get your questions answered, so you can get more trade ideas. We're giving you the Options Impact video series, the MTM email hotline, which is priceless, and the town hall meeting, so you can get better and better at some of these volatility strategies. Again, just for the top students, just for the top 12 people to join us right now at markettaker.com/99. A couple frequently asked questions, then I'm going to answer your questions. The class is every day, every trading day from 9 to 10 Central Time. It's 10 to 11 Eastern. It's recorded. There's a lot of people who just watch the recordings because that time slot doesn't work for them. We encourage you to attend live so you can make the trades if you choose to, right there along with John, live, real time. So it's not like an alert service where there's always a delay. You're the last person to know on your trades. These you know at the same time as everybody else. You don't need any special software or anything. I use GoToMeeting or GoToWebinar just like you're watching right now. We cover stocks, ETFs, and everything. So again, we're accepting 12 students right now at marketticker.com/99. And we've had Lisa join us so far, and Tommy join us so far, and Dave join us so far. So we're accepting 9 more students. I might have time for like one question. I need to make sure to end on time.
Sure, take your time.
Oh, okay, great. No, it doesn't look like. Oh, somebody asked what happens after the month. So this is the best part. If you join this class on our website, it's a $349 a month investment. But if you join at this super discount, this trial price today, right now only, and you're one of the next 9 people, after the first month, you renew at $227 a month. That's 40% off for life. You can cancel anytime. That's no problem, but it's great. I mean, you can save thousands of dollars over time.
And hi, everybody. My name is Marina, and I am the Trader Chick. I am going to be checking everything out here in the question box, so please send them over to me. I really enjoy talking to you guys live, and I'm really excited that you are all here in the first place. It really means a lot to me. Okay, so let's dive into the presentation. Today, we're going to talk about 4 steps to simplify your day trading and dominate the market under any condition. So, hello, this is me. I'm Marina, the Trader Chick, and I have a question for all of you guys. Who here has a lot of fun when you trade? I really want to know the truth here, because you'll be surprised when you think about this question. You might not be having as much fun as you think you are. Now, I want to ask you another question. How many of you guys have driven a car or have been in a car? I know it's kind of random, but just go with me. Because the shocking fact of driving a car is that worldwide there are gazillions of car accidents each year. This is not to be a downer. This is pretty much the fact that we all know this, right? So why does this matter? I'll tell you why. Because every single day we get into our cars and we jam out music. We love driving with our kids. We sing, we dance, and I'll be just as guilty as this, but we text and even answer the phone while driving, right? It's get very distracted in cars, right? And this is actually me. Motorcycles have even more accidents, and this is how I sometimes drive with my 2 sons and my doggy. Yeah, I'm an expat in Guatemala, and believe it or not, they kind of let you get away with this stuff, which is kind of crazy, but it's still really crazy. Now, the real question here is, how many of you guys have lost money in the market? Come on, don't be shy, because we've all lost money in the market. I certainly know that I have. I have lost a ton of money in the market. And look at me, I'm still totally here. I get to hang out with my kids every day. I go out with my husband. We travel a lot. So this is the thing, right? Why is it that we can get into the car where there's real chance for real life injury, even fatalities, yet still have a lot of fun in the car? Yet when we trade, the worst that could possibly happen is that we lose some money, but we trade it in such a more deadly, serious way and lose all of the fun out of trading. Do you guys understand what I'm talking about? Yeah, basically this is the way it is. But don't get me wrong, you know, you cannot get into a car and just simply wing it. You do have to know how to drive a car. You do. I mean, it's kind of goes without saying, right? You have to know the basics of driving a car. You have to know where the steering wheel is. You have to know where the gear shift is. I drive manual, so you have to know how to shift gears, where the clutch is, where the accelerator is, where the brake is. These are just basics, right? You have to know this. You can't just get in a car and go. It's not even possible. You probably won't even get out of first gear, right? If you even know what gear to go in, right? So trading is so much like driving a car, but without the crazy risk that is involved. Okay, you have to understand the basics of trading, and that will truly prevent you from crashing, right? And that's really what I want to dive into. So one of the things that happened to me was, after years and years of learning other people's strategies, following their trade setups without having any idea what I was doing. Basically, what I was doing is I was never learning to drive my own car. You know, like when you're doing driver's ed, you have an instructor sit next to you and tell you what to do. Basically, that was what was happening with me, but it was with my own charts. I never learned how to read the market for myself, right? And you know what happened? I lost big time because I was following somebody else's strategy. They were saying that there was a good trade. I didn't see it. I flew in, I chased the trade, which means that I got in later than what they've already said it. By then it started to turn the wrong way. I would not let myself permit that it was going the wrong way. And I literally blew my account. I lost $3,842 within 5 minutes. And this happened 3 times in a row in 2 months. This was 6 years ago. Okay. And I remember, I will never forget that day. You never forget when such a huge loss, right? And it was all because of your own ego, because of your own lack of acceptance. I was completely defeated. I literally was laying on the ground in my bedroom, and my husband comes in, standing over me, and he's looking at me. He's like, why are you doing this to yourself? Why are you doing this to yourself? Why are you losing your money? Why are you not just stopping? And do you know what? You would think that I would have stopped after that. No. Instead, I went for 2 more days. I revenge traded. And if you guys don't know what revenge trading is, good for you, because it sucks. It's wishing that you could get your money back, just going in for the most stupidest trades, and ended up losing another almost $2,000. So basically, in car terminology, I totaled my car twice, right? And then, with no pun intended, I officially had a breakdown. Okay, so usually what happens when you have a breakdown? You come down to 2 massive decisions, right? When you come to a breakdown, one is you quit, you get out, you never trade again, or you have a breakthrough. So before I tell you what happened with me, how many of you guys have watched the movie Nacho Libre? If you haven't, go. It's a really, really, really cute, fun movie. So there's this one part, Nacho, who is this guy, he wants to be a luchador, which is a wrestler, right? In Mexico, it's called lucha libre. So he wants to be this wrestler, and he is terrible, terrible. But he's desperate. He's got this massive passion. It's this burning desire. And he's standing one time in church, and he's lighting candles, and he says to God, he's like, God, why did you give me such a strong passion for fighting and made me such a lousy wrestler, right? Well, that's basically what happened to me. I was constantly yelling at the universe. I'm like, why did you give me such a burning desire to trade? And I am so bad at it. So with Nacho, what happened, he ended up winning the biggest wrestling match ever. And for me, I had a breakthrough. So what happened after the breakthrough? I did get away for probably 2 or 3 months. I totally had to stop, get my mind in order, because it is a very emotional roller coaster. And what I decided to do was kind of just clear out my charts entirely. I mean, I completely erased all of my indicators, and I had like 10 different indicators going on. And just watch the bear charts, right? Naked charts, basically. And I started to understand that the market actually has this language. It's talking to us. It is very clear in what it is about to do. It's not telling me that, oh, it's going to now go into a completely new direction or this, but it is showing me the different, it's telling me, you know, right now you need to slow down. Right now, this is not the good time to go. Oh, this is the biggest amount of strength. This is when you should get in. And this is what I did for over like 8 or 9 months. I just watched the charts, and then I realized that I needed to put in a couple of more indicators, simply because day trading, you can't just have naked charts, right? Because I talk to so many traders and they're like, oh, I get in when I see a long bar or a long candlestick. And I'm like, what does that even mean? You can't do that, right? You have to understand what is happening. You have to understand the language, the market language, and you have to listen to it. Okay, so let me do a really quick official intro. And okay, so I am Marina, the trader chick. I am an expat. We live in Antigua, Guatemala. This is my family. My husband is Guatemalan and my 2 sons. I am actually trilingual. I speak Russian fluently because I am a Russian refugee from the USSR, actually the same place where Anna is from, the hostess of our of today's event. She's from Kiev. I was born in Odessa, which is now the Ukraine, but back then it was all part of the Soviet Union, and I speak Russian. So I was a refugee from the USSR over 41 years ago, and I was raised in the United States. So that's why I speak English. It's pretty much my mother tongue, even though Russian is my native language. And then I have been now living in Central America for over 18 years as an expat, first in Costa Rica and now 10 years in Guatemala. And this is really important for being trilingual. I don't know if any of you guys are trilingual or bilingual. Even when you learn a new language, when you get older, there's this click that happens, right? For me, it was Spanish. I was in my late 20s when I learned Spanish. And when I first started to learn Spanish, it was really hard. Every word I had to translate in my head, what people told me. And then when I wanted to say something, at first I had to say it in English, then I translated it in Spanish, and then I said it. It was really, you know, it was a difficult process. And then one day, I just woke up and I just knew it was, I'm not 100% fluent, but I just knew. I don't translate anything in my head anymore. I just speak it. I just, when I hear it, I don't sit back and translate. I mean, there's some words that I still don't get and I have to answer. And that's what happened with the market. After I was really studying and came back with new eyes for like 8 months or 10 months, it clicked to me. It was like, wait, this is an actual language, and you just learn it. And I think it was probably because I have learned so many languages in my life that I realized that it was a language. I'm also a big time traveler. And the reason why this kind of important is because everything I've done in my life was for 2 things. One is for me to always be around with my family. Like, I make sure to always be around all my kids' schooling activities. My sons are both professional climbers, which means we have to travel internationally a lot. And also, travel for me is not a luxury, it's a necessity. I have to do it. And actually, before I became a day trader, I was, first of all, a professional fitness instructor, I lived in New York in Manhattan, and I was a travel writer. And I actually still own this website. This is my first business online, travelexpert.com. You can still find me here, and you can still read about our travels online here. So when I've always had an interest for trading, financial markets, I should say. And then around 8 years ago, on my 40th, around my 40th birthday, I just really knew that I wanted to get more active and be trading more on a daily basis. And that's how I started to day trade. Okay, so what are day trading, the basics of day trading, and what can we do to make our trading fun so that we can feel the same energy when we get into the car for road trips, when we sit down in front of our charts? And that boils down to pretty much 4 basic strategies, which I have discovered. It's not that much. That's the thing. Day trading can be quite simple. It's not easy, but it can be quite simple, right? And it can become almost automatic. You just start to read the words, and you're like, okay, it's telling me this. Oh, it's telling me that, right? Okay. So I have a gift for all of you guys, okay? I have a gift. I have a cheat sheet of everything I'm going to be teaching you guys right now. You could go makingofadaytrader.com, totally free. You will get the entire presentation that I am showing you right now in the entire language. This is kind of the cheat sheet that I use when I sit down and trade. Makingofadaytrader.com, and you will instantly get this cheat sheet. All right, are you guys ready? Let's begin. So, market movement and the breakdown of a trend. Oops, there we go. Yeah. Okay, so we all know that there are 3 trends to the market, right? I mean, it's pretty much obvious. We have the upward trend, we have the downward trend, and then we have an idea. It's a logical idea, but I don't think a lot of people really understand the potency of the sideways trend. And when I mean potency of the sideways trend, what I mean is this is where the majority of the money gets lost that you win during the day. Why? This is the indecision area, right? This is an area of slowdown, indecision, and kind of an exhaustion patterns, right? So what happens is very often is this is where the most amount of a mental craziness and emotional craziness can happen. And I'm going to teach you guys now how to spot them and why it is crucial to stay out. So let's just go really fast into breaking down a trend. So we have an upward trend, what we call the bull market, going long or buying, whatever you want to call it. It's all the same thing. It's when each pivot is higher than the one before. Pretty basic, right? The same thing goes here with a downtrend. We could call it a bear market. We could call it going short. We could call it selling. It doesn't matter, but it's pretty obvious. Each pivot is lower than the other one, right? So it's pretty obvious that this is a downward trend. There's also mini trends. So you have like the full on overall trend, and then you could have like a mini immediate trend, because when you're in the live market, we're seeing what's immediately in front of us. And this is an immediate momentum, right? And then if it goes back up and continues in the up direction, it makes sense because it was the overall movement of the day, right? Okay, so let's talk about sideways markets, or called consolidation areas, transitional areas, whatever you want to call it. This is the trader's worst enemy, and we need to learn to spot it and avoid it. All right, so here's a quick breakdown of what it could look like. Here's a downward trend. Then we have this slowdown, this sideways market, consolidation, where the market is consolidating, bouncing back and forth. And in this particular case, it became a transition area and it went upward, right, to an upward trend. Okay, this is another way of what it looks like, right? When it's consolidating, when it's bouncing back and forth between 2 areas. We're going to go into these 2 areas in just a second. I'm going to explain what they are. Here is a really good example of what it looks like, right? Another strong consolidation could be, transition, we don't know yet, decision time. They could be mini consolidations just as well. Here they are. This happens very often. All right, so let me explain to you, why is this a mental or a mind game while you are trading? So here we have this upward trend. And one thing that I noticed for myself was I was constantly trying to do 2 things with the market. 1, predict what the market is going to do. 2, try to beat the market, because we hear those words all the time. Beat the market, beat the market. That is probably the biggest falsity there could ever be. You can never beat the market. We are not big enough to move the market. Absolutely not. We are individual retail traders. We cannot move any market. So all we can do is understand it. So what happens here, right, when we have that kind of a mind frame, and majority of us do, is when we start to see this consolidation area, 2 things go on in our minds right here. 1, the market's been going up all day. It's going to continue going up. I'm going to look for a long. Or the other thing is the market's been going up too much all day. It's going to correct. I am going to go and look for a short. Right? But we have no idea what the market is going to do, and we have absolutely no right to pretend we do know. So all we do know, though, is wait, it's starting to consolidate. It's starting to not go anywhere. So what is the next most important thing we could do? And that is to sit out of the market. Yes, there are 3 positions in the market: getting in, getting out, and sitting out. And people do not use the sitting out enough, because what happens is we start to mess around, and then we get in, we lose, and then we go into revenge trading mode, and we start to lose even more because we start to believe that we could beat the market, right? So how do we start to spot these areas? These areas which the market respects, and we need to respect them. We need to understand that the market revisits the areas, and we cannot foresee if it's going to break through or if it's going to change. That is not for us to know. For us to know is that this is an area and we need to respect it. These areas are called support and resistance. What is a support area? So we have this beautiful downtrend, and all of a sudden, boom, it's just not going. It's hitting a floor, right? It's hitting a floor of the market. It's just not getting past it. Okay, so we don't know if it's going to continue, or in this case, it changed direction. That is not for us to know. All we know is that there is an area, right? Here's another beautiful example of a channel. We have the support area, the floor, and what is this? This is the resistance area, the ceiling. Okay, so this is where we go up and it starts to hit this area. Now, here we have a pretty decent new trend happening, right? And it goes here, it starts its own support area, and then it goes up and it hits this area. So because it's already hit the area, and like I said, the market respects areas, we as well, we are prepared to understand that when it hits it and doesn't break through it, oh, that's because it's a resistance area. We have to understand that and not be anywhere near while that market is doing that, right? How do we start to spot these consolidation areas, sideways movements, whatever you want to call it? This is my absolute favorite way of spotting spotting these changes or these slowdowns. They're reversal patterns and divergences. So after my breakdown, I had over 10 different indicators. It was horrible. When I came back, I went down to 2 indicators. So I use only 2 indicators now. I use these lines. I call it, this is one indicator more or less. It's the EMA line. I use 3 different EMA lines, and I use the MACDs. I find that the MACDs are the least lagging indicator in the market. It pretty much works really well with the strength and what is happening, right? So when I see this massive reversal pattern, which is a double bottom, and I see this beautiful divergence, I know something's gonna happen. I don't know if it's gonna reverse completely or if it's gonna slow down, but I know that it's the beginning of something. Here already, you already start to notice this grinding behavior, and it's already telling me because of this divergence happening here, right? So again, reversal patterns are my absolute favorite. When I start to spot them and then I start to spot divergences, like you see here, I already know that I need to stay out. There's no reason for me to be anywhere near these markets. And this is the beginning, right? Just because it's a double bottom or double top, it can become a triple bottom, triple top, quadruple, and so on. And that's the beginning, right? But it's already saying it to us in the beginning, right? It's already telling us that something is going to be switching, right? So we have to understand how to put this all together. Before I go into this, I want to read some of your questions. I'm seeing some people link to making of, yeah, hang on a second. I will post it right here. No, that is not, wait, hang on a second. Sorry, no, it's right here. This is it. Making of a daytrader.com. And you could have it all. So it's not this one. I don't want people going to there. This is it's making of a daytrader.com. So please go only to that, making of a daytrader.com. All right. Oops, hang on, I just lost it here. Yeah, no, I need this removed. I don't want people going there. That is not where I the trader check. I prefer to go making of a daytrader.com. All right. So yeah, please go there, everybody. That'll be much easier for you to just sign up quickly. It's free. And let me just see something here. Okay, yeah, got it. Okay, so let's discuss how to put these areas to work for us. Okay, now that we understand when it's happening, what do we do during this particular area, this particular thing? I didn't put in a support area, but this is a mini channel right there. We sit. This is where patience is truly a virtue. It is truly important. However, when you know that the market is telling you this thing, it's like getting into a car and pulling up to a stop sign. You just don't question it, right? When you're sitting in your car, you do not question that. What you question is, Okay, wait, it's telling me a stop sign. Now I need to see if everything's okay. And you go, but you come to a dead stop, right? Just like at a traffic light, you come to a dead stop until you have a pretty significant confirmation, which is a green light, right? So here we have this resistance area, and then we look for this boom, this explosion, this green light of letting you go. In this case, it's a breakout to the same direction, right? So this is something that we have to understand, okay? Just a quick understanding of what a breakout is. Imagine you're going north. You're invited to your friend's house and they live up here and you're starting here. So you're headed north and all of a sudden there's a detour on the road and the construction workers are like, sorry, you got to go west, you got to go east because the road is closed. So then you make a right and you continue. And then the construction worker will right here will be like, okay, it's open, you can continue in the same direction. Or they could say, you know what, the road is completely collapsed, go home, you can't go. That means a transition, you got to go back, right? So this is pretty much how it works. Okay, so let's put it all together. But before we go anywhere, I want to ask you, what does your trading station look like? So do you guys trade on something that looks like this? Because let me tell you, this is not going to make it look fun, right? This is what I feel whenever I see anything like that with all those monitors. And at one point, I had 3 monitors, I had 3 charts going on. It was horrible. I was completely out of my mind, stressed. I don't know if any of you guys have ever watched the show King of Queens. It was on, I don't know, it was like a decade ago. It was a really cute show, really funny. It was about this one guy. Well, it was a couple, whatever. It was the one guy, and he had all these buddies, and he bought himself a brand new, I think it was like a 90-inch screen television. And he invited all his friends over to this huge to watch this huge television. And on top of that, he got like DirecTV that had like 2,000 channels. And they're sitting in this room and they're clicking the channels. And one of the guys is like, you gotta stop, you're triggering my epilepsy. This is what I feel like when I'm looking at this. I feel like my epilepsy is gonna be triggered. I don't even have it. So this will make you so stressed out, and it really takes away the fun. Okay, so what does a trading station look, what does my trading station look like this? This is it. I trade on one chart now, because it can be really fun, simple, and guess what, it's portable. It's portable. I can take my computer with me anywhere and trade anywhere. And this is what my chart looks like. I call it my canvas, my art canvas. I have 3 indicators, right? I mean, 2 indicators right here. This is my EMA lines, and this is my MACDs. Okay, so what are EMA lines? They are literally exponential moving averages, right? I have 3, and somebody here has asked me what they are. I use the 20 period, the 52 period, and the 135 period EMA lines. Okay, let me explain to you what I use the EMA lines for. Like I mentioned before, I get so many people that come to me, they have no strategy, and they're like, oh, I see a big bar, I'm gonna enter. And I'm like, but what does that even mean? Like, here's the long bar. This doesn't go anywhere. That just because that's not a strategy, right? So imagine a trader like an archer. Okay, you guys know archery, you know, bow and arrow, and they hit a target. Now, have you ever seen any competitions with archers? They never walk around aimlessly, right? They have a very specific line in the sand where they stand. My EMA lines are my lines of the sand. I never just take a trade anywhere. I have to have it move, and both from here and the MACDs in here, and it has to retrace. It has to come back to my area where I'm shooting my arrow from. And then I have a very specific target, 1 point target, okay? That's what my EMA lines are for. And my MACDs, they just show me the power and the strength in the market or the weakness, right? Like right here, look at this. It's becoming a pretty significant area, right? Totally losing all of its momentum, and the MACDs are telling me there's massive divergence, right? Okay, did you guys get your cheat sheet? Makingofadaytrader.com. Please go there, makingofadaytrader.com. Ron, yes, there will be a recording of this webinar. And again, everything I just showed you guys is in this cheat sheet, makingofadaytrader.com. So please go and get it. It's free, and you guys could totally send me your questions. You could send me your charts, whatever. I'll be happy to talk to you about it. No strings attached. Just get the cheat sheet. Okay, so let's take a look again a little bit more on the charts, right? Resistance areas. So again, what did I tell you guys about these areas? They are crucial. Look at the massive divergence. And when we are going towards this dotted line, this is already the zero line, right? This is when there's no, absolutely zero strength in the market, right? So the MACDs are really good in that respect, right? And it's pretty significant, right? Massive divergence is not going anywhere. And then all of a sudden, boom, it blasts off. And look how much it blasts off right here. Look at the spacing between the zero line and the MACDs. So when it comes back to my area, boom, I am all over it, right? Here's another beautiful example of the breakout trade. This is a trade. This is trades that I use all the time. Look, resistance area, massive divergence, barely going anywhere, not breaking through my resistance area at all. And then all of a sudden, blast off. Massive strength here, massive strength here, and I'm sitting here. I have an order waiting. I never ever go in market. Never go in market. You will lose money if you go in market, and professional traders never go in market. They know exactly where they want to enter. I have my order waiting right here. This is where I've already got my thing going on, and if it comes back and fills me, boom, I'm in my trade. And look at this, massive, right? No divergence. I know that this is going to go for at least my 1 point that I'm going for my target, right? Okay, another bonus trade. Right now, I just showed you the breakouts more or less, but you don't have to use it in that way, right? So here we have this pretty significant market movement going up, and then we get like this resistance area. Look at the divergence. It's totally slowing down. It's hanging out of the zero line. And finally, boom, it breaks through. It breaks through, and barely any retracement here, comes to where I want to get in on my trade. And I know that this is going to give me significant movement, right? Here's another example of the exact same thing. I call it the initial instant reaction trade, because we have this massive area which becomes a transition area. It's obvious we had an upward trend. Look at this line. It's kind of inclining that way. Upward trend comes to resistance area, consolidation area, sideways movement, and boom, it totally breaks through. Look at that spacing. Retraces back to my area. At this point, I already have my order waiting right here, and if it fills me, I'm in. Boom, I get it, and I get my target. I am filled. Okay, so let me go through some more of your questions here. All right, so remember, guys, makingofadaytrader.com. This is where you could get all of this to you, and you can send me your questions, whatever you need. Okay, so Ron, you are asking me which broker do I use. So before I go into explaining that, I think will be really important is for us to look at my actual, trading. Yeah, here we go. What I trade with, right? Oops, what is that? Nothing. Okay, so here is my chart. What I use is NinjaTrader. I am not, saying go only with NinjaTrader. It's just the one that I use, the one I personally use. Reason why is because I trade the ES Mini. This is a futures market. ES Mini is the S&P 500 index in the futures market, right? So that's why NinjaTrader, for me personally, I believe is the easiest and the best interface when you are working with futures, right? They just are the best. Now, they are affiliated with two different brokers. I think one is Phillips and the other one is Dorman. And the reason why, if you are going to go into futures, it works a little bit different as far as commissions goes and other things. So the brokers that they work with give you the best commission rates for the round trip. So I'm going to explain that a little bit right now. Okay, so what you trade in futures is you trade by contract, okay? So what I do is you could go in as many contracts as you want, and I have, you see these grids right here, these little grid boxes. This is 1 point. In the ES Mini futures market, 1 point is worth $50. Us future traders, we will never talk about the price. You will never hear us say that. You will only hear us say ticks or points, because we do not care where this is or what this is doing. I am a scalper. I don't know if you guys know what scalping is. If you do, please give me a little, hey, I know what it is, and I'm a scalper. That's my strategy. So what is a scalper? Scalper is somebody who goes in for smaller targets with a smaller risk. And this was something that became life-changing for me. Why? When I was going through and losing all that money, a lot of the people that I was following, when I didn't even really understand what I was doing, was saying constantly to go for these huge targets, which look really good on paper, right? However, what goes behind a big target? One, too much stress. Two, a lot more risk on the table. Three, there's a lot more pullback before you hit your massive target. When I came back, I started to realize that after I was reading the market and understanding the language of it, I was seeing that it was going to the one point really well. Like almost 90% of the time when I was saying it was going to go, that's when I was noticing that it was hitting those marks, right? So I was like, oh, this is great. I'm just going to go for these smaller targets. I had no idea that that scalping was even a thing. I didn't even know that was such a word, right? All I knew is that all of a sudden I started to hit these smaller targets, and it wasn't about the money, it was about my confidence. All of a sudden I started to feel more confident in me as a trader and actually as a person. Because I don't know about you guys, but if you're totally losing and constantly failing and doing poorly, guess what? You close your charts, that feeling isn't going to go away. You're going out there and you're going to be treating your spouse badly. You're going to be talking to your kids badly, even talking to your dogs badly, right? Because it took away your confidence, because it took away who you were. And when I started to scalp and hitting those small targets, all of a sudden I was just feeling better about myself. I'm like, oh my God, I'm making the right decisions. I know what I'm doing. And that's what it became. So for me now, I am a scalper. I am one target, 1.1 risk. That's it. I hit my 1 point. It's $50. If I go in with 10 contracts, that's $500. What more do you guys need? Greed kills more traders than anything else, okay? You have to start being happy with the smaller profits, because the majority of us say we want to make $1,000 a day, but the majority of us are barely breaking even, if that, right? So that's why what really changed for me. Okay, so here is a good example of a breakout trade starting to formulate, right? This is a little bit harder to really focus on because I wouldn't probably be in this simply because it's here, but now I am watching here. Yes, I see that it had hit here before, but look at that strength. Look at that movement now, right? That's telling me the market is doing something pretty great. There's a lot of movement here. However, I am seeing divergence. So I have already, like, I am prepared to know that it will hit here, and chances are it might not continue and just head back, and it might even completely cross over and head back down here, right? This is how I personally read the market. Okay, so this is what my charts look like. I don't know if you guys have ever worked with NinjaTrader or anything, or what do you guys trade? I don't know. What is it that you guys are trading? I would love to hear from you. I don't see anybody telling me what you guys are trading. Let me know, because Forex. Okay, so Larry, you're trading I think CLS crude, well, ES, and also the Nasdaq. Let me ask you, how well are you doing, Larry, with those three different instruments? I call them instruments. So look at what happened, guys. It's hitting that area. Remember, I told you areas. Market loves areas. So if I was to enter here, I would know that I can't go any past that, but I would probably be out after 1 point. So Ron, what I use is called a 6-10 chart. 6-10 tick chart. Sorry. Do you guys know what a tick chart is? Okay, tick chart is, you see these numbers right here? You see what I'm having here? This is transactions. To me, this was another thing, being on a tick chart helped me remove a lot of the stress of another indicator called the volume. Because if you're in a time frame of 5 minutes and the market is going nowhere, it's sleeping, you're going crazy. Who cares if it's 5 minutes? So a tick chart is I get to see live, real-time movement, right? Look at that. I know exactly right now there's only 100 transactions left. Boom, this is fast. This market is moving pretty well, right? So I know right away that the volume is there. It's 610 transactions per bar. So that's why it is called a 610 tick chart. If I was on a 2000 tick chart, my bars would be counting down 2000 transactions, right? I don't know anything about options, Ron, so I cannot help you. So Larry, yeah, it's really good to only look at one. However, I really recommend cutting out all of them and just focusing on one. Because okay, look here, everybody, this is an instrument, right? So if your child came up to you and been like, hey, mama, papa, I want to play a musical instrument. You'll be like, okay, awesome. Which instrument do you want to play? And your kid says to you, well, I want to play the piano, drums, cello, and flute. You'll be looking at them, you're like, what do you mean? They're so different. You can't play them all. You should first learn one and really master one, right? So why is it that we could start trading so many different instruments all together? It's not possible, right? It's just not possible. And automation, unfortunately, I'll be honest with you, it's not really working. You have to be present for day trading. That's something that I've noticed. I know it feels like it's an easy way out and it'll be really fun if we can, but the reality is automation, you really do. Oh, look at that. It totally broke through. This is an awesome market right now. It's just heading straight up. There's no divergences. I'm going to be all over looking for these things here, right? So just my advice, I really recommend focusing on only one and sticking to one until you have truly mastered that one, and only then looking at more different different instruments to go for, right? So look at this. Here we have this beautiful trend line also forming. You know what, my charts have been going a little bit weird all day today, so I'm not going to be pressing on that anymore. Hang on a second, let me go back to my here. Okay, so I have a few more minutes to answer some more questions. Yeah, so requires constant hands-on, right? So I guess semi-automatic for you, Larry, means you have your stop and your risk in place, right? So that it could just automatically do that for you. Is that what you mean? Yeah, but you still need to sit and really, really focus on your charts. You have to just be in the moment. And when you're going for pointers, you know what? Guess what? It's pretty quick. And usually my trades don't last longer than 3 to 15 minutes. So it's a pretty good deal. That's kind of the benefits of being a scalper. All right, guys, I'm about to sign off. So go and get your cheat sheet, makingofadaytrader.com. Get your cheat sheet, and also you could send me your charts, you could send me your questions. That's what I'm here for. I really want to help you guys. Oops, what just happened there? All right. All right, I think I have one more question. No, all right, well, thank you everybody so much. Thank you, Anna, for having me. This has been a lot of fun. And any questions, you can find me on thetraderchick.com. Oops, where am I? Here we go, thetraderchick.com, or go to thetraderchick@gmail to send me an email, and I'm always here to help. Thank you again. I really, really appreciate you all being here.